thanks for joining this panel. I'll be moderating this for today. And yeah, to start off, since you guys are all working for VCs, an opportunity to pitch your portfolio companies. Which investments have you already done in the staking space, and why? If you just can give like an elevator pitch on the ones you've done before.
All right, so maybe I'll start. My name is Miroshnik. I run a fund called TenSquared. Prior to TenSquared, I built another fund called 10T. And we're investors, we're later stage investors and we're equity investors. And so we focus on companies that are kind of Series B plus. So we're very fortunate investors in great companies like Figment, like Blockdaemon, like Intstones. We're also investors in companies that use those services like Ledger, and also in a number of centralized exchanges that are building staking capability and staking tool sets for their customers, such as Kraken, for instance. So I don't know if any of that needs an elevator pitch. I think everybody here is deep in this space and would be preaching to the converted. So it's going to be a big part of how, what consumers want, what financial institutions want. And so the core thesis is this space is going to get much larger. It's a space that's not a winner take all. There's a distributed future to it. There's a centralized future, and we're looking to deploy capital across all of those ideas. So I'll pause there.
One of the co-founders at Ethereal Ventures, and we set the fund up in the start of 2021. But prior to this, we were essentially doing venture investments at consensus off balance sheet. And for us, I think the preference has always been to kind of follow the same philosophy that we've had of backing really strong technical teams and domain experts in whatever area or niche that they're working in and supporting them along their journey in that sense. And I think as it comes to staking, and if we basically look back at Fund 1, I think one of the predominant categories that we've had a lot of exposure to is the broader staking space. We haven't invested in infrastructure providers, but we have invested in a lot of staking related protocols. So we either led or co-led seed rounds in the likes of Obol, who's doing distributed validators, where we co-led the seed round in EigenLayer on the restaking side. We also led the Series A round for Alluvial, who's doing enterprise liquid staking. And personally, I mean, I've also sat on the board of Rocket Pool for a long time, having led that investment out of consensus. So, I mean, in general, we look at the staking space, and we're also active participants in other ecosystems like Cosmos, where we run validators and relayers, and generally believe that the staking space will set the stage for a lot more institutional participation, a lot more ways for people to actually start thinking about securing the networks that they love and they want to keep using towards like a decentralized future.
And I'm Nick. I'm an investor at Figment Capital. We're an early stage blockchain infrastructure venture fund that spun out of Figment, the infrastructure provider. We mostly do early stage token investing. So we've made a number of investments in the staking space, but just a few that I'd highlight are Obol, the DVT service provider, Alluvial, which does institutional liquid staking, and then EigenLayer, which of course does restaking. And we're super excited about the future growth opportunities of staking, and so continue to invest in that area.
Perfect. So as it looks like you guys are all focusing on different types of staking companies, but in general, if you're evaluating a staking project, what do you really optimize for in terms of your assessment? Like, you could look obviously at the tech, the team, BD capabilities, the unit economics. What's really for you the focus?
Sure, I can start. I guess from our standpoint, one of the things that we look at is things that could fundamentally lead to a difference in the market structure from the way things stand. And these could be endogenous, things related to the protocol, things that have to do with, like, say, for instance, lack of native delegation in protocol, or difference in the way withdrawals work, the capabilities that validators are supposed to have on the network. And there's this, again, exogenous things as it relates to other validators or other staking companies in the space or protocols in the space, like the support that exchanges have for staking related products and receipt tokens, the mentality for people to have capital efficiency in that space. And if there are teams who manage to kind of understand the ins and outs of what these differences are, and if they can think about capitalizing on those, and they have the obsessiveness and the wherewithal to actually execute on that, then basically it's that those kinds of teams we back. But ultimately it then ends up being a lot of work on the BD side. They have to be selling, they have to kind of be convincing different forms of stakeholders and kind of tap into these. So that's something that we typically like to keep an eye out for. One last point I would probably add is that there's a very different notion of value accrual, especially when we are thinking about decentralization. And it's very different from like the winner-take-all mentality we've typically seen in Web2 companies. It means a lot more collaboration, a lot more work that has to be done on the public goods side, for instance, and thinking about what it means in that theater. So if people have that kind of mentality, I think that's what we love.
Yeah, and on our end, I can speak to protocols because that's what I'm more familiar with. I think any good idea is probably going to get copied. So if you're building DVT, there's going to be multiple DVT teams. If you're doing restaking, there's going to be multiple restaking teams. And so really your defensibility is your liquidity. And so the question we always think about is, what is your ability to attract liquidity and what's your ability to maintain that liquidity? And so really we're looking for teams that have some sort of technical edge or business development edge that allows them to attract and maintain liquidity in ways that other teams can't.
So as a later stage investor, we have the slight benefit of not having to take really the technical risk of a product. We come in a little bit later and already see customers that are experimenting with it or full on using the product. And so the risk we take is, quite frankly, scaling risk and a margin expansion risk. And so what we look for are existing KPIs of a well-running business, a phenomenal management team, assets under stake, how many customers are being onboarded, the growth of those customers. Even in this market, if we kind of hold the price of assets constant, are you able to succeed on the operating metrics that you've set out for yourself, right? And so looking at those few key things gives us a good sense for this business clearly knows who their customer is and who the persona is that they're pursuing, where and how they're going to compete, and there's a clear path that we can model out to this business being successful and eventually being either acquired or more. And so for us, it's more of these later stage criteria that make the decision.
Got it. And you already alluded to it, actually, in terms of the exit path that you guys are envisioning with your portfolio companies, be it an acquisition or on the token side, probably more like once it's liquid, right? Maybe if you can expand a bit on that, like what you're looking for with your portfolio companies, what you're optimizing for, and give a little bit insight in your thought process on that. Maybe starting with you, Stan.
Sure. So since we tend to invest a little bit closer to the exit, it's a big part of our thinking is to, is the company, is it a product or is it a feature, right? And so is it something that's going to be absorbed by, another synergistic player in this space? Or is it something that can really stand alone, that can build and expand its business into multiple product lines that balance each other out? And is it a business that's going to be able to go public standalone? There's actually very few of those businesses that make it there. And so the question is really who is kind of the medium long-term partner. And I think in the staking space, as the the founders of Staking Awards were just alluding to, you're going to have an influx of financial institutions that realize, hey, these are yielding assets and people want them, and so we need to have this capability. And most of them will do a very simple buy versus build analysis and say, okay, let's buy these capabilities that are going to be kind of the core of financial services for the over the next 10, 20 years. And so I think within this space, most folks are thinking about who are the long-term strategic partners, what are the M&A kind of opportunities, and so I think exit is kind of defined that way. There's a couple of great companies that are kind of reaching that escape velocity where they're becoming IPO-able size, right? Certainly Figment is one, Blockdame is another, and so those companies have kind of mapped out a path to being a successful large standalone business. Many of the others, the space is young, and so we're just starting to see folks come into their own and become of the size where they can really consider strategic options. So that's kind of how we think about it later stage.
That probably looks a lot different on the protocol and token side. So maybe Praneeth, continuing on that.
Yeah, I think if we look at our portfolios, it's primarily like a token-based exit that we fundamentally see. I actually am quite curious to your points in terms of how there could be consolidation or verticalization happening in the infrastructure provider space. I think people need to be more experimental or innovative and see how we can structure these exits so we can have more of an understanding of like what these business lines would look like. But from but from like a token standpoint, I guess we just want to make sure that there is some notion of the token kind of securing off-chain agreements or value flows and providing a better way for people to coordinate within this network and using the token as a means to bootstrap that and also incentivize people to start using this as framework. And that's what we fundamentally think about. But
Sure. Yeah. I don't know if I have too much to add on the token side. I think a lot of these staking protocols are really attractive businesses in the long term, and are investments that we're really interested in holding for long periods of time. But of course, the way that these investments are typically structured are such that 3 or 4 years after the protocol goes live and the token is live, you have of course the option to sell, and so we're constantly evaluating the future opportunity of the protocols as to whether or not we want to hold those investments for longer periods of time, or whether we want to take some off the table and continue supporting the team.
Now, investing is only one part, right? Then once you've invested, you continue to be in close contact with your portfolio companies on the portfolio management side. How do you guys work with your protocols on the staking side? How close are you to them on a day-to-day basis? And yeah, if you can give some insight on how that looks like, maybe starting with you, Nick.
Yeah, so it depends on the specific business. I think if it's a business that's explicitly trying to attract liquidity, like a liquid staking protocol like Alluvial, a lot of the portfolio support that we do is about helping them with distribution, helping them attract capital, helping them bootstrap that liquidity that I mentioned earlier. When it comes to say something like Eigenlayer, which is trying to attract protocols that will build on top of it to provide additional yield opportunities to stakers, a lot of what we're doing is helping Eigenlayer with the business development work of attracting those protocols that would want to build on top of its platform. So it depends on the specifics, but typically, they know the tech very well. They have more than enough engineering capability. That's why we invested in them. And so now we're sort of helping them expand their network, meet more teams, attract more liquidity, attract more partnerships, and help them sort of lock in their position as the leading staking infrastructure provider for whatever vertical they're playing in.
Just to add to some of those points, those are extremely pertinent. In that sense, there's a few things that we also like to focus on, which are primarily the points around ecosystem alignment. I think when you kind of think about these protocols and their paths to becoming, like category leaders in the segments that they are working in, it fundamentally means, again, to the point that I made earlier, it's not like bashing down competition. It's not a zero-sum game, but it's fundamentally getting a notion of alignment between different stakeholders. And so a good part of that has to deal with getting people in a room, asking them to leave their egos at the door, and trying to facilitate something meaningful that could result from the same. There's a lot of people in the space, and that's something that we want to basically actively foster, but between our portfolio companies, between the broader space. So that's one thing that we like to do. And the other aspect is fundamentally building some of the other things that protocols engineering teams don't have as much time to focus on, which is building, say, a proper engineering and a proper team culture, helping them with hiring, helping them think through what it means to actually progress from starting out as an idea to something that could be more broad spanning. So those are some of the things that we typically like to do.
Yeah, I'd say for us, it's more sort of scaling driven, right? So the company already has kind of a mature cadence. So there's regular board engagement, and the tasks that are in front of us are more around business development and strategy and helping cross-pollinate with our other portfolio companies, with portfolio companies of other investors in kind of the broader extended family, and also thinking about how it can help you win customers who in our network can bring that to bear. And then, a lot of it is just thinking kind of through growing pains. We've kind of seen what the good looks like. So what does the corporate finance function look like? What does HR look like? What does a founder divorce look like that's graceful? All kinds of issues that come as businesses get bigger. And, it's not just a dozen guys in a room, it's 40 people. Maybe it's across multiple offices. Maybe it's becoming a global business. And so dealing with those kind of strategic board level corporate finance, CEO kind of hand holding type challenges is kind of where we spend most of our time.
And sticking with the topic of portfolio management for a minute now, if you look forward, what kind of catalysts, but also obstacles do you see for the next phase of growth for staking projects? And obviously this is going to differ between the more later stage companies that you invested in versus the more early stage companies that you're involved in. But what do you see there in terms of catalysts and hurdles as well? Maybe starting with Praneeth this time.
I guess in terms of maybe even starting with the broader macro side, I think we still are in a place where long-term rates have been stubbornly high, and we will probably keep seeing a little more of that until things basically turn around.
and additional expressivity.
You have anything to add to that, Stan, or does that make sense for you in terms of the risk management perspective on the rehypothecation of staking yield?
No, I think that's an excellent point about introducing additional optionality. I think that's exactly right.
I think we're close to the end here. Maybe giving the opportunity to the audience as well to ask questions if there are any.
Hi, gentlemen. So currently, Ethereum is the de facto leader in the overall appetite for institutional investors to put cryptocurrency onto a staking mechanism. How do you see this development in the future? Is it that ETH will win in the long term, or are there any others who will make up some market cap of Ethereum staking?
I mean, we're believers in a multi-chain world. I think it's going to be consumers going to demand much more sort of beyond Ethereum and multiple types of products, multiple slices of yield, multiple types of risk, and so I think it's a world of many winners.
At least for me, and as part of some of the more recent conversations we've had on the institutional side, it's all Bitcoin. I think people don't see staking as much as they should be seeing staking for what it is. So I think we still need to really grow that pie. We need to get people to understand what staking is and get to facilitate that. And I think the beneficiary for that will be Ethereum to start with. I think it has the largest stake available. I think there's a lot more understanding around that. So we'll see that, but there could be more flows in the future to other runtimes, to other protocols. So.
Yeah, just in terms of like the distribution across chains, you'll probably see some power law distribution, like some sort of weak power law distribution. And we think Ethereum is going to be that dominant protocol, especially with eigenlayered restaking, setting Ethereum as like the primary staking platform. But of course, we believe that a lot of these networks are going to be very successful and important in the long term. And so we're excited to see the growth of a multi-chain staking ecosystem.
Well, that brings us to the end of this panel. Thanks to our amazing panelists here, and thanks for joining.